Hi, my name's Brian Dement, and I'm here today to talk to you about the Bitcoin investment thesis. We're going to look at Bitcoin through three traditional lenses. First, we're going to take the value investing approach. Second, we're going to look at the tech adoption curve. And third, we're going to look at Bitcoin through a historical investment perspective. And if you guys stick around, I'm going to give you a crazy fact at the end about Bitcoin that might just blow your mind. So let's dive into the Bitcoin investment thesis. First up, we're going to look at Bitcoin through the value investing lens. The value investor is always looking for the inherent value of something versus the market value of something. So what is something intrinsically valued at versus what are people currently paying for it? And for all of you Warren Buffett value investors out there, you guys should be going absolutely bananas over Bitcoin. Here's why. What's the value of just American money transmitters? I'm not talking about worldwide money transmitters, which is much, much bigger. So we're just talking about American Express, Visa, MasterCard, Venmo, PayPal, Western Union. The combined market cap of those companies is over $2 trillion. What's the market cap of Bitcoin today? It's $1 trillion. Now, Bitcoin is hundreds of times faster, it's hundreds of times cheaper, and Bitcoin doesn't need a second, third, or fourth middleman in order to execute a transaction. So if the inherent value of sending money in the United States is $2 trillion, that's a 100% increase on the current value of Bitcoin. Wouldn't you love to pay $1 today for something that's worth $2? Well, that's what we have before us with Bitcoin. Next up, we're going to look at tech adoption. When things go from analog to digital, they always become more valuable. And we see this with something like paper maps. In the biggest year ever for paper map sales in the United States, they only did about $40 million. Now let's compare that to digital maps. What kind of economic activity do digital maps account for? About $200 billion, that's right, billion dollars every single year. So digital maps are about 4 orders of magnitude bigger than paper maps. We see the same thing with encyclopedias. In the best year of sales ever for encyclopedias, they did about $70 million in sales. So let's just take a look at Google alone, which is like a digital encyclopedia. In just the last 12 months, Google has done $328 billion in gross revenue. So again, digital encyclopedias are about 4 orders of magnitude or nearly 5,000 times more valuable than their analog counterparts. Think. Digital is always more valuable than analog. The good news here is that Bitcoin is digital gold. It has all of the great qualities of gold, plus it's digitally native. What's the market cap of gold, you ask? Well, it's about $13 trillion. So let's say that Bitcoin underperforms and it doesn't have a 4 orders of magnitude increase. It just has a 1 order of magnitude increase. Then that puts Bitcoin at a market capitalization of $131 trillion, also known as a $6.2 million Bitcoin. Everything that was analog is going digital, and digital things are always more valuable than analog. This is the tech adoption cycle. Next up, we're going to look at the historical perspective. 100% of sovereign currencies fail. And the things that made fiat currencies fail in the past are present in the fiat currencies that we have today. So we're dealing with a checkmate situation. We know exactly what is going to happen, and we know the moves that we have to make. Why? Well, because there's no mechanism to throttle the government's ability to spend at will. Historically, what has always been the fix to broken, failing forms of money? The answer is sound money. Bitcoin is the fix to this because its rules are immutably written into code just like a constitution. But this constitution cannot be changed by anyone. And one of the most important rules written into that constitution is that there are only ever going to be 21 million Bitcoin. It's a fixed, finite supply. So what happens when you measure something that is being created infinitely by something that is fixed or finite? Let's go ahead and do some basic math. Whip out your calculator and divide infinity by 21 million. What do you get? And like I told you, I'm going to give you a bonus fact about Bitcoin that might just blow your mind. In 2022, billionaire Michael Saylor,
Let me tell you about my best friend.
Founder of MicroStrategy, yes, that little company that's outperformed NVIDIA, Tesla, and Apple in the last 12 months,
said in 2022 that if Bitcoin gets 3 pieces of infrastructure, that it will go to $5 million. Well, according to Michael Saylor, first up, it would need a spot Bitcoin ETF. Next up, it would need a change to the FASB accounting rule. And then third, regulation would need to change so that banks could custody Bitcoin. Well, guess what's happened in the last 12 months? That's right. Bitcoin ETFs launched. Not only did they launch, they were the most successful ETF launches in the history of ETFs. Next up, a change to the fair accounting rules around Bitcoin changed favorably for companies to be able to hold Bitcoin in their treasuries and on their balance sheets. This is game changing. Last but not least, guess what happened just in the last 2 weeks? That's right. The US government approved banks to be able to hold Bitcoin on behalf of their customers. Those puzzle pieces have just been put into place. And over the next 5 years, Michael Saylor expects Bitcoin to climb to $5 million per coin. And there you have it. Those are the 3 elements for the Bitcoin investment thesis for traditional investors. My name's Brian Dement, and I'll see you next time.